Hey, Adam Hoeksema here from ProjectionHub. So in this video, I'm going to walk you through how to create a set of financial projections for a septic tank services business. So my background, I was an SBA lender for 12 years. We made over 1,500 SBA loans during my time as executive director of an organization called Bankable. And so today I own ProjectionHub and I focus on helping clients create financial projections and business plans and helping walk them through the SBA loan process. And today I'm going to be walking through our septic tank services financial projection template that's going to give you everything that you're going to need if you are looking to apply for an SBA loan, or maybe even just doing some internal planning, or perhaps even trying to raise some investment capital for your business. So I'll walk you through the details of this. We're going to put a link in the description of the video below so you can grab this template and follow along. If you stick around to the very end of the video, as a thank you to you, we're going to give you access to a coupon code to take a discount on this particular template. So with that, let's go ahead and dive into how this template works. So I'm going to start here on the at a glance tab, and this is kind of the end of the process. So after you have entered in all the assumptions, you're going to get some nice profit and loss glance tables and charts, some graphs, some key ratios here. You're also going to get a 5-year income statement summary, 5-year cash flow summary, 5-year balance sheet, and then the income statement, cash flow statement, and balance sheet all broken down by month for each of the 5 years. But in order to produce those reports, we have a little bit of work to do. So we're going to come back to our input assumptions tab. I'm going to walk you through how to fill this out. So the first thing you need to know is that every cell that's highlighted in blue is an assumption that you can change without breaking something in the model. So now might be a good time to mention that if you are feeling overwhelmed as I'm going through this, or you're feeling like, man, I just want someone to customize and fill this thing out for me based on my plans, we do have a projection fill out service that we can just take care of this for you, make sure that we're getting it filled out correctly and based on your plans, and make sure that it's going to, kind of pass the sniff test of what an SBA lender is going to be looking for in terms of a set of projections. So you do have that backup. We're here to help you with that. However, I do think you're going to be able to do it on your own. I'm going to walk you through it. It's hopefully not that complicated if you are comfortable in Excel. First, you can set a company name. You can set a projection start month. You can set an opening cash balance if you're already operating. I'm going to assume that this is a startup, and we're going to assume a personal investment, that you're going to make a personal investment of $20,000. A lot of times the SBA wants you to put in a 10% down payment. So we have down here projected an SBA loan for $200,000, and assuming you're going to put in 10% of that roughly as your own investment. On the accounts receivable terms, this is when you are going to get paid. So we're going to assume that you're going to get paid 100% of your sales upon delivery. Now, this could be if you have more commercial clients than residential, and the commercial clients, if you invoice them and then have to wait to get paid, you might want to do something more like 50-50, and maybe we'll do that in this example. We'll probably have part residential services and maybe part commercial services in our example here. So this is going to have an impact on your cash flow because you're going to end up waiting some period of time. We're assuming 30 days on those commercial invoices. After you complete the job, it might take a little while to get paid. On the accounts payable side, we're going to assume that you pay 80% of your bills in the month that you incur the expense, and then 20%, maybe this is you swipe your credit card for fuel and you pay for fuel today, but you don't have to, you put it on the credit card, you don't have to pay the credit card for 30 days. So that's the type of thing we're looking at here. You're probably not going to have inventory, so we just set those to 0. Fixed assets, we set a septic pump truck here for $140,000 and $50,000 worth of additional tools that we think you may want. So you've got $190,000 worth of equipment here. Again, we're assuming you're investing $20,000. You're going to borrow $200,000, so a total of $220,000 in terms of sources of funds. $190,000 in equipment. That leaves you with $30,000 of kind of working capital. Okay, let's move to the input revenue tab here. So we have this kind of broken down between residential and commercial business. We're going to start by assuming an ad spend. So let's say you're going to do ads directed to residential customers. You're going to spend $2,000 a month on ads. You think it's going to cost you $50 per residential customer lead. So that's going to give you some number of leads from paid advertising. Say you also have some organic or word of mouth leads. So let's say 15 kind of leads per month that are word of mouth plus a 10% annual growth rate. We've got a total residential customer leads then of 55 a month and kind of growing over time. And then we have the ability to set a conversion rate of leads to new customers. So let's say for those residential leads, you're converting 60% of them into new customers, giving you total new residential customers of 33. Here you can set the number of active residential customers that you already have. So again, we're going to say 0 because we're going to assume you're a startup. We can set what percentage of new customers do you expect to become regular customers. So probably probably you go provide a service and you're probably trying to encourage those customers to come back and utilize you again on some regular basis. And so maybe you're successful at converting 50% to kind of sign up to expect to use you for future services. We can also set an annual churn in regular customers. So this means that basically the churn or the cancellation rate. So what percentage of those regular customers stop using you each year? So we're going to say you lose 25% of your regular customers, and that may be because, folks move, residential, customers are going to move, and then you've got to work to acquire the homeowner again at the new place. So ultimately, this gives you your kind of total regular active residential customers. From there, you can set how many services are they going to purchase per year for new customers. So we're assuming all these new customers are going to purchase something once, right? So they're going to purchase once a year. And then your active regulars, those people that are kind of utilizing you on a regular basis, we're assuming 0.5 services per year. So in other words, every other year they get their septic tank emptied or serviced on average, okay? From there, this is going to show us, it's going to calculate based on those assumptions, how many services we expect to sell each month. And then from there, we have the ability to set the percentage breakdown of our services. So we can list our different services, the prices, and then what percentage of these total services that we're selling are, a standard pumping or emergency or a grease trap cleaning, for example. So you can have different sets of assumptions here. And then your price point, your cost of materials or disposal. So you probably you'll have to empty the truck and probably pay for that. And so that's what I would enter in here. And then you also have the cost of labor. And so this assumes, if you are, as the owner, also the driver and the labor, then you could potentially put 0 here because you're not going to pay for labor cost, that you are the labor, right? But if you are employing a driver, this is where we'd want to put in our labor cost. And what we assumed here, we have an equation. So we're assuming 30% labor cost. So it's 30% of revenue we're assuming will be for labor cost. From there, we can set an annual growth rate and prices of 3%. That'll calculate your residential pumping and cleaning services revenue. And then we go through the same exercise for commercial customers. So let's say you also can service some commercial customers, businesses, and again, you have ads, you have a cost per lead, you have some organic leads. So all the same kind of process here. Your prices may be different for commercial versus residential. And ultimately, that's really all the same thing. And so you can see your residential versus commercial revenue. So let's look at our operating expenses tab here. So we can start by actually adding expense categories up here. So we can add up to 10 expense categories. Then you can kind of add unlimited number of individual expense names, but then you may want to put them into a category. So right now we just have 3 basic categories: sales and marketing, general and administrative, and building expenses. So let's say, for example, maybe you're renting a space to store your equipment or your truck, and that's $500 a month, for example. Now you might have some expenses that are a percentage of revenue. And so here is an example of credit card fees. So, you might have customers paying you with credit card. You could select a percentage of revenue here from the drop down. We set that at 0.02, which means 2%. So that's how you'd enter a 2% credit card processing fee expense there. And then the last input tab here, we're getting close to the end, is our salaries tab here. So I put in a slot here for you as an owner, but a 0 salary. So we're going to assume that your profit, your pay is the profit of the business. So no set salary for yourself. But then maybe as you grow, so maybe in month 25 here, you can set month started. So month 25, let's say we're going to hire a supervisor. We're going to pay the supervisor $45,000 a year, some benefits, employer taxes, annual raise of 3%, and you can set the month starting and month ending for that position. Now again, remember that the drivers are really going to be paid for in this cost of labor section. So what you're wanting to enter here is really your salaried positions, not really the drivers in this example. Okay, and after all of that brings us back to where we started. So, in the first year, $264,000 revenue based on the assumptions that we had in there, and slight net income as you're starting up in the first year, kind of then ramping up to a bit more. Now, you'll notice kind of a dip in net income because in that third year, that's when we hired the additional supervisor. Again, as a reminder here, if you as the owner are the driver, you're not going to have as much cost of goods sold or as much labor cost. So there'd be more for you to take home as the owner because you're not paying for that outside labor. So as you're kind of looking at it and thinking, okay, if I want to own and operate this business and what could I earn, you'd want to consider reducing this cost of labor down to 0 if you're going to be the only one providing that labor. I hope that's helpful. Again, if you have any questions, feel free to reach out to us at support@ProjectionHub.com, and we'd be happy to help you customize this, fill it out for your unique situation. Again, as a thank you for sticking around to the very end, we put a link to a form in the description of the video below. If you fill out that form, we'll email you our most up-to-date coupon coupon code so you can take a discount on this particular template. And again, if you found this video helpful, I'd love it if you like the video, subscribe to our channel. We're going to be posting more content about SBA lending and raising financing, other financial projection templates and business planning resources that hopefully will be helpful to you as you get into business. So we hope this has been a good resource for you. Thanks.